bear market of 2026 gets its third sell signal on break below 66.16, the 200-day moving average. As I've been letting patrons know, the progress of the bear market. First was on sell trigger was on break below 67.80, not just a break but a close. It's important to get the close, otherwise you get action like this. Dip below, then back up to confuse people. Oh, Nadeem, it's back up at 1600, is it? We're going to new all-time highs. No, we need a close below this. The breaks pull price action lower, but you're going to get a reaction higher to confuse the noobs. So that was the first sell. Minor 67.80. Next sell 67.20, which was minor again, and very confusing to most. They're getting, oh yeah, they're getting happy. We're on our way down now, and then it flips up. Anything changed, Nadeem? Nope. We need a close below 67.20, which we got here. That's confirmed. 2 confirmed sells, and then we got the 200-day moving average, waiting for that. Oh, it bounced off there. It came close, and then we finally got it yesterday. We finally got a close below at 66.06. So that's the third sell. What about CI18 crash bear neural net? What's that say? Well, that's for patrons only. Yep, you're not going to get everything for free on YouTube. So that is the major 100% reliable neural net indicator. It's proven, it's been unchanged since it gave its first sell in late February 2020. Prepare for a crash or bear market. It doesn't give a price prediction, it just tells you expect a sharp price action lower. And what's its current state? Well, you're going to have to become a patron. They already know. By you watching this video, they're sat there going, oh, they're sat there reacting to it. So what about the fourth sell, The fourth sell, when that coming? That's going to be what I call the MOAL, the mole, the mother of all sells, which is a close below 65.20. Now, don't get confused, folks. If it breaks and closes, that don't mean we're going to get a waterfall. We might, especially if CI18 is on. But look, break, reaction, break, reaction, break, small reaction. It could react higher, but I doubt it, because this is a major momentum indicator. You know, the 200-day moving average, a lot of analysts and fund managers and investors look at the 200-day moving average. They take on board what it means. So their reaction will be to sell. So I don't think it's going to, not off the 200-day, I don't think it's going to do that. I think we're going to have a continued downtrend. So what about the VIX? What's that saying? Oh, it's in a volatile trend higher. It's volatile. It's going to spike to over 60. Can't say how high it'll go, but I expect it'll reach over 60. And why is all this happening? Why is this happening? It's because of President Dumbo. Oil price above $70, economic pain. Look at it. It's been stuck. Be stuck at 95. That's intense pain. You get pain at 70. So what's that? Oil price is now 35% higher. What's that mean? What's that mean? It means gas prices are up 30%, and they're probably going to go up 50%. That's real economic pain. And what do the Americans think of that? Let's find out.
If you could say something to President Trump and he was going to hear you right now, what would it be?
You are a worthless pile of
And you voted for him how many times?
3 times. That was my bad. Apparently, I'm an idiot.
So not
well,
everyone
lots of personality
is
there,
with
John.
Trump,
Lots of personality. Yes.
Right. Not everyone's thrilled with him. That was a voter who voted for him 3 times. She went on to talk about the gas prices. She went on to talk about the war, about not supporting the idea of us in, basically going around the world. So a lot to process there. But this is going to be the real pressure test for President Trump and Republicans in the midterms, is how many of the people who voted for him are A, sticking with Republicans, and B, going to show up in the midterms. And I think that's still an open question here, just several months out from those midterms, Kelly.
No.
Oh, please, yes, absolutely. You have a very good interpreter. It was because we wanted Surprise. Who knows better about surprise than Japan? Okay? Why didn't you tell me about Pearl Harbor? Okay?
Call Zelensky.
Oh, Mr. President, hello.
Zelensky, please help me to open the Hormuz Strait.
Sorry, Donald, you don't have the cards right now. You are not in a good position.
So, in terms of the trend forecast, yeah, folks say, Nadeem, you said X is going to happen by, and it's not happened yet. Well, what folk don't get is that trends take time to play out. Look, we had a distribution range here. Yeah, it dropped, it failed to break. See, 67.80, it failed to break it, bounced. So that's time gone. Again, attempted, failed. So all this, you don't know when it could have broke there. It could have broke in January. Yeah, it could have broke here, but you don't know. So the forecast was on 31st December. So I have to try and guess. Well, you can't, because you don't know when it's going to break. That's what folk don't get. You need the sell triggers for the momentum in the expected direction. If you don't get the sell triggers, then you don't get the move. It remains stuck in an accumulation distribution range. For me, well, it depends on which way it breaks. If it broke up, then this would be obviously accumulation. But given that I'm 72% cash, I see this as a distribution range, which is now rolling over into the bear market proper. And as I often say, the longer the price remains in a range, the greater will be the resulting move on its resolution. So what does one do? One just continues to position oneself for the expected move. It's not a case of waiting and doing nothing. It's buying what drops and trimming what pumps, as the recent dump in software stocks illustrates. And then the pumps in Circle and Coinbase, they were epic pumps. It went 200% off its low. Circle, you can't not make money. Even if you're crap, you still made at least 50%. But many of my payers, they made over 100%, 150% profit. And I've trimmed it. I went to Circle. Anyway, let's leave that for later. So anyway, I'll just to take the range to position yourself to further capitalize on the expected move. You're 72% in cash for a 72% crash analyst. And this video is a mere fraction of my extensive analysis that is first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $9 per month, which is nothing compared to what you get access to. I try to do best by my patrons. Folk only need to go read my articles open to the public and the literal thousands of comments under them. Look at this one, 2,200, nearly 2,300 comments under this article, which shows the level of engagement with patrons. Keep calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. Access to my latest mega analysis, a comprehensive 3-part guide on how to really get rich during 2020 that has exclusively been made available to patrons right now. You can go and read the 3 guides right now, full access, which is a truly epic piece of work that took me the whole of 2023 to write, which condenses down my lifetime knowledge and experience down to some 60 chapters, which is on top of my ongoing analysis and trend forecasts that are made available to patrons for just $1 per month. There are no bolt-on extras, no courses, no other crap that all these con merchants do. You get full access to everything. So, did you buy the October 22 bloodbath? Especially in tech stocks, FANGs, with the likes of Meta plunging below $100? Well, I and my patrons did. Go read my articles and the comments posted under them. We got well blooded by catching all those falling knives. Did you make the mistake of listening to the likes of Clown Kramer on the Cartoon Network, who stated Meta, amongst others, was finished? Meta finished at $100 a share, was the mother of all buying opportunities. This clown stated it was finished. Says it all about Clown Kramer and the Cartoon Network.
They're finished. They're finished as places.
They're finished. They're finished as
places to invest.
We keep talking about
places
this
to
falling
invest.
knife, as if the knife continues to fall. Though there are people who
Well,
look
I'm
at
just
this
saying.
and say,
Look, I'm looking at the money coming out. Where's the money coming from to buy to buy industrials? It certainly isn't coming from new people saying, "Wow, it's time to put money in the stock market," because they get such a great rate on the 2-year. I think it's money coming, rotating out of companies that have dominated this market for the last decade and into companies like Caterpillar who actually know what the hell they're doing.
Are you thinking that the tech companies that I think that you're disappointed in are going to get religion, if you will, and get disciplined? And what does discipline look like?
You know what they are? I would call them atheists. They believe in nothing.
That's a nihilist.
Meta? I don't know. I think they have to change the name again. They really do. I mean, you can't be saying Meta. I don't know. How about loser? How about stupuda? I don't know. Anything doesn't even matter. I don't know if they can make a comeback. The facts have changed, and I have to change with it. I believed. I thought I'd be safe. I was wrong. Bottom line, forget being leaders. Big stocks are now followers in a post-COVID era, where we're learning that their earnings were far more inflated by the pandemic than we knew. We're just now discovering that tech emperors have no clothes, if they're even emperors at all.
So at least give it a try. Read the comments, see the depth of analysis. You won't be sorry because I do my best by my patrons. Go that extra mile. Gaining access to over 35 years experience. Right from before the 1987 crash straight through to this stock's bear market. That we ride the quantum AI megatrend into the future.